It's just a good rule of thumb. Inflation higher, rates higher, inflation lower, mortgage rates lower.
Hey y'all, Katie here with Team EvoAZ, and welcome to the Arizona Monthly Market Housing Update with Matt and Katie, where you learn all about the greater Phoenix area housing market, including information on interest rates, what's happening with housing prices, and tips and tricks for buyers and sellers. Please like, subscribe, and download our episode so that we can continue to get this real news out to the real people.
Hey y'all, Katie here, founder of Mom Nation and owner and operator of Team EvoAZ at eXp Realty, your go-to gal for anything real estate in the state of Arizona. I am the sponsor of today's show. I will link my page and information in the show notes so you can quickly and easily get in touch with me should you need anything real estate, any advice, or maybe you're looking to get into the business. I sure hope you enjoy today's show. Thanks for listening.
What's up, everybody? It's Katie and
Matt.
And
Ryan.
Yeah.
Happy June and welcome to your monthly market update. Boy, do we have a lot of information today, guys. Let's jump right into it like we normally do. Hey, Ryan, can you tell us what is going on in the rate department?
Yeah. The big news impacting rates was, the passing of the debt ceiling, which really did avert a historic default. And while the deal was being negotiated, really, the uncertainty of that impacted, you saw it in the stock market, and it impacted mortgage rates as well. We did see a jump in rates because of this uncertainty, but as soon as the deal was passed, mortgage rates responded immediately to the news, and we did see things improved. So, we're continuing to see rates drop, but just like, the stock market, it's never in a straight line. So if you look at the trend, you got to zoom out because you'll see it's going lower, but there will be periods, before the rate lowering goes back up that we do see little jumps here and there. And that's what we did see. Because, for example, I know you mentioned this, Katie, in one of your recordings that, a few things that impacted rates was the jobs report last week. It was hotter than what was expected. And Saudi Arabia announced that they're reducing their oil output. So why does that impact us? What exactly does that do to interest rates? What that does, when more people have jobs and when it's more expensive for gas, prices go up, and that's inflation. Inflation goes up. And so really when that happens, rates go higher. It's just a good rule of thumb. Inflation higher, rates higher, inflation lower, mortgage rates lower. So, but there's factors that are pushing inflation lower, which we were talking about in other podcasts, and that's what's expected this year. For one, used car prices. They've been stubborn, but they did see a drop this week. And shelter costs as well. Those have been dropping throughout the past year. So the good news is inflation figures that come out next week, we do expect it to show a drop. And this is right before the Fed meets. And what the Fed might be doing is pausing their rate hikes. It's not certain. They could increase it a quarter again. They could pause it. They could signal pauses in the future. So it's going to be an exciting week next week. But, we're hoping inflation does come in lower, and that signals the Fed to stop their hikes. So, yeah, it's going to be interesting.
Absolutely. I mean, it's always interesting.
Yeah.
It seems like it's exciting every week.
Yep.
Yeah. And I think, go ahead, babe.
No, go ahead.
Well, what I was saying with what Ryan was just saying about how rates are affected, I think, a lot of consumers, a lot of people that are watching this, and they're really not, putting a lot of bandwidth and brain power towards really understanding what causes rates to go up and down. I think a lot of people think that the rates are going up because of when the Feds actually say rates are going up.
Right.
And this is a very much a living thing. This thing's going up and down based upon the millions of things that are happening globally. And just like Ryan said, so we have that happening, which is affecting rates. And at the same time, we have the Fed that's stepping in and ultimately stating, hey, we're going to do rate increases or decreases, which just add to that.
Yeah, that's exactly it. We get those questions all the time, especially when they announce a rate hike. A lot of our clients who are in process or pre-approved reach out and they, oh my God, my rate went up. But you have to explain it to them because the Fed rates, that really affects more credit cards or car loans, things like that, or lines of credit. So really what the Fed's trying to do is they're trying to lower inflation. They're trying to make it more expensive to borrow money to limit the amount of money that's out there. And in return, when they do that, inflation goes down. So the good thing is the rate hikes that they've been doing, it is working, and rates are dropping. So if they get enough confirmation that their rate hikes are working and inflation is going down, they'll stop them, which we're hoping next week happens. So yeah, it'll be interesting to see what they decide to do.
Heck yeah.
Have you noticed any changes since we last spoke about a month ago in applications? Have you seen an increase, decrease? What's going on as far as mortgage apps on your end?
We have, I think a lot of that has to do with some of the news finally reporting something that we've been talking about for months, that prices are shifting. That even, we did see a drop, obviously, when rates went up in the wintertime, but it's shifting pretty quickly. And I think that word's getting around, and we're seeing more investors now too, kind of starting to dabble back in purchasing. Is that what you guys are seeing?
Absolutely. Armless is predicting an increase again for May. So when May statistics come out, we'll see if that actually happened. But I'm thinking, I put my money on that. I'm thinking that it's probably accurate. We did notice, and this is cyclical, right? Like we're noticing it's more of a normal market, like what we were used to before the last couple of years, and things are kind of happening at their normal pace like they used to, or their normal season like they used to. So in May, we noticed as a team as a whole with our clientele that it was a bit quiet in May during the weeks of Mother's Day, graduation, Memorial Day, right? Which is really common. So the last couple of years didn't feel that a bit. But prior to, the bulk of our careers, right, that was the case. And now that that's all over, just in this past week, we've noticed a huge spike in buyers jumping the fence, getting more calls. I'm getting more inquiries, getting more showings on my listings. It's almost like summer, summer's bringing life again, which is, again, a normal thing. Are you seeing that as well?
Yeah, we're definitely seeing that. Yeah, people, obviously the kids are going to be out of school. They're anticipating that. And that's when we see people start shopping for homes. So that has a lot to do with it too. And there was a report that came out, and we follow, 5 different, housing prediction value studies. One's Case-Shiller, FHFA, CoreLogic, Black Knight, and Zillow. And it's crazy. All of them reported in March. Those numbers just came out that just month over month, it was about a % increase in home prices. And even in April, some of them are reporting is about 1.5%. So like I said, I think, that with the summertime and the news that things are shifting and there's not that crash that a lot of people were predicting, like the 2008, and they're like, no, this is different. We're kind of back in the normal market now. So just adding all that together, I think that has a lot to do with why we've been all busy.
Yeah, totally agree. I saw something come through. I didn't look deep into it, but just kind of skimmed it from Case-Shiller that said that the decreases are over as far as home prices are concerned is what they were reporting. And it's kind of funny what you just said, because I have to share this little slide girl. I have to share this slide from Armless. So we all know that I follow the Armless reports very, very closely because it's hyper-local information right here that affects us and affects our clientele. And I love this last line at the bottom of this page in their report from this month. For the housing doom crowd that believes we are living in 2008, foreclosure activity, already at historic lows, declined even further in April. Housing crash talk is just a load of piffle. It's a new word for me. I looked it up, not going to lie. There were 25 residential home foreclosures in April. 25, guys. New residential notices were down 15.65% month over month and flat year over year. Now, obviously, we've talked about that a bunch. We know that over 50% of the homes here in the United States have over 50% equity. So that's, a reason why we're not seeing foreclosures as much.
Because, yeah, like you said, Katie, the majority of people have more than half equity in their property. They have rates in the 2s from refinancing during those periods. And that's part of the reason why we have, such low inventory. I think we mentioned that before. People are just kind of locked in. They don't want to go from a 2.5 to a 6.5 right now. And so it is exciting that rates are going to be dropping. I know you had that other slide too, Katie, if you want to show that, because two things will happen when rates drop. Demand will go up, but I do think inventory will go up too, because some people who were chomping at the bit to upgrade, to sell their house, that have all this equity and they want to move up, will finally feel comfortable going from a 2.5 to maybe, a 5.5 or even lower.
Yeah, it'll make sense
absolutely.
at that point. Go ahead, Matt.
Absolutely. And I think there's another really interesting thing that might contribute to some of our inventory, like helping out. Now, I do agree. I do believe that we are probably going to see some relief from the rate stance, or at least news for people to know that there's a more likelihood that rates are going to go down versus up, which I think will be a motivating factor for buyers. But the thing to think about is what we experienced last summer. When we went into June 2022, we had roughly 10,000 homes on the market, which we currently have the same exact number. But what ended up happening is we saw our inventory spike and spike hard. We went all the way to 19,900 homes come the 1st of November of 2022. Most of those homes were added right around the middle to the end of summer. And then what we saw was everything started backing off. And we remember seeing this. We even had a few clients that decided that they were no longer going to sell. They were in a position that they wanted to see if they could get their price, but hey, they would rent if they had to. And a lot of people did that. And a lot of people went in to become landlords last summer. That wasn't intentional. It was more of a reactionary decision. And I'm really anticipating a lot of those coming up on their year lease to say, you know what, it's time to put it on the home back on the market because it's a favorable condition.
Yeah, absolutely. And to speak to the slide that Ryan was mentioning the other day, for those of you who are listening to the podcast, it's from a recent Forbes piece. Again, it was in the Armless report this past month, and it's just really showing 5 experts here and what they think will happen in the coming months with regard to interest rates. And we're talking Freddie Mac chief economist, NAR, which is the National Association of Realtors, Compass U.S. Region President, Mortgage Bankers Association, so the MBA, and Rinaldi Group President Stephen Rinaldi. They're all saying that it's likely going to be slow and steady, but they're thinking, somewhere in the 5s to end the year.
Which would be great, which is more kind of in, normal interest rate ranges. So we got spoiled during the pandemic with rates in the 2s. That was very abnormal. But yeah, when you look at the history of rates, that's a really competitive rate.
Absolutely. And if somebody's looking at this and saying, okay, well, if prices are going up and rates are going to come down, does it make sense for me to jump in now while the prices are where they're at? Because we don't know how far they're going to climb. And then potentially refinance out of the higher rate at some point in time later. Feasible?
Yeah. And I think to what you were saying before, we've already seen investor activity trickling up. And we won't even say it, I'd say investors are becoming more aggressive than fearful. I think more optimistic. The prices that we were getting hit with by investors 6 months ago were like, arbitrary lowballs, where like, let's just 250 less than list. Now they're actually taking a more calculated approach because they realize there's a lot of light, coming down this tunnel, which would be interesting because once again, if where we're at with inventory, even if all of a sudden, say some people say we're no longer going to be landlords and we're going to now put the homes for sale on the market, that lessens our rental inventory. Then we now are going to have an uprise in people that are saying, all right, it's time to buy, which is going to lower inventory even more, which is going to put people in a pickle to say, maybe we can't buy right now. We're going to have to be more prepared. We're not ready for this. We're going to have to rent, which inadvertently I do believe is going to spike rents again, especially come September, October, when everyone's moving back to the Valley for what they come here for, weather, school, all that stuff.
Yeah, absolutely. And what's interesting that I saw recently, and this is a great segue into another topic that we wanted to chat about today, is so investor activity has gone down. Okay, I think we can all agree on that from where it was back in the day, back in the recent day. But back in the day, it has definitely gone down. The amount of investors that I get calling or the amount of investors that I get looking at my listings is significantly less. But these larger investment groups, what was interesting that I was reading about is they are moving here in the Phoenix area, they're moving more toward build to rent.
Mm.
Isn't that interesting? And there's been an article that has got us all up in arms, like our entire city, that came out recently about building and about water. And that was something that you had wanted to mention, Matt. So
yeah, no, it was
now's
a
the time.
report that was put out. It was ultimately backed by Governor Hobbs, and it definitely ruffled the feathers of many. Because what ends up happening is we know that there's these political words that are, catalysts for emotion, and anything we can do to strike fear in the listeners is exactly what anyone wants, especially mainstream media. And what this report did is it really put, I'd say, a lot of sensationalism on the fear side of our water issue. And of course, the way this report came out, a lot of people are poking holes in it and saying, not so much it's not factual, but you didn't really present the facts the way they should have been. And then, of course, the way that it was picked up by the national media, it's like the game of telephone. Let's make it even more fearful. And now these subject lines are, oh my God, Phoenix is going to run out of water and all this. And we know that anyone that's not living in the state that's outside is already thinking, well, why would you build a city in the middle of the desert? They've already had, you talk to most people that are out of state, they're like, well, what about water? Well, we have a 100-year guarantee. They've always done this. And a lot of people that are really upset about this are the people that have really put a lot of work into this whole report and everything that we've been doing for the last decades to assure the 100-year guarantee of water. And they're ultimately saying it's kind of negating the facts on what we have here. And now this fear has been sensationalized. And by that happening and making national news, because these guys love to print anything that's fear mongering, it's actually now getting investors to say what's going on. And they've received over 200 calls from like big time investors saying this makes no sense. What we're reading in headline news contradicts the reports that we're actually getting from our investors, the ones that are putting up this money based on the risk of having water in it. It's contradictive. So it's pretty interesting. The bottom line is it's pure fear mongering. It's disappointing that Kate Hobbs supported something like this or allowed it to get out with such language to kind of fuel the fear. I think they could have taken a better approach and saying, hey, maybe we need to be more aware, but right now things are good and our models are working and the actions that we're taking are working. But it wasn't that. It was more like, hey, Chicken Little a little bit. So
what's the point? To deter people from moving?
There could be a number of things. When I read it, I thought about it. One is politics. I think that, a lot of these politicians are just doubling down on what they know. And this is exactly what they've all been doing for the last 3 years, 4 years, since COVID and all. I mean, that's just what it is. Anything time there's a little bit of fear, let's sensationalize that, make it worse. And even if we don't do that in our articles or reports, let's just give enough that we can write a subject line that is sensational. And that's exactly what we saw. Even if you look at what this report is, it's vague. It's not even really pointing at anything different than the reports that everyone has based on our water supply. It's just more to support that clickbait, fearful news subject line. Yeah. And, and I think a lot of people are exhausted from that. The other side of it could be her ultimately, or whoever's involved in lobbying for this stuff, is they're trying to maybe weaken the investor spot so maybe new investors can get in based upon the real news. I don't know. But I do feel that there's a lot of politics and kind of business going along with this.
Yeah. Well, it definitely, like you said, it definitely was alarming to many. And those who maybe don't follow it or don't have that deeper insight or that deeper information, they got scared. And, just my mom community, I've had this conversation over the last week. I think it came out last week, right? About, just discussing this new build community, for instance, out in Queen Creek that has been established for a while and has been building for a while, and I'm sure pulled all their permits a long time ago. We're having the conversation, oh, is that going to be affected? And so I think you're right. I think it definitely is causing some fear that it's just unnecessary out there.
It is. And it's, if you really look at it and reflect on what we've seen this year based around water, and remember, water is obviously it's our life source. We need it as humans, and living in the desert, you're going, what's going on? A lot of the companies that are coming in and require water for cooling all of the software and everything that's supporting, the technology that they're building, but it's directly attributed to climate change. And climate change is one of those key political terms that everyone wants to, push or go against. And it's just one of those divisive, I feel like, things. It's real. You got to say that nowadays when you bring it up. But at the same time, a lot of them really doubled down on the problem we were having with water in Arizona. And after this giant snowfall that we've had all winter long,
Right?
and a
Flagstaff
lot
was
of rain,
flooded.
we had floods. Cities are flooding. We are seeing a lot of lakes being replenished and all this. And I think this is something that kind of goes against that narrative that was being screamed 8 months ago. So I kind of feel like this is just one more of those little supportive things to make it look like they don't have all this egg on their face in the coming months when the election machine fires off. It's all very timely and convenient.
Yeah, totally agree. Any thoughts on that, Ryan?
No, thank you for even mentioning, Matt. Yeah, that article definitely made its rounds, and we've seen a lot of people asking questions or having some fear about it. So I appreciate you bringing the real news, Matt.
To the real people. That's
Yeah.
what we do here. All right, guys. Well, that was action-packed. Thank you so very much for another wonderful month of information for our viewers. If you guys want to check out any of our previous episodes, we've been at this for a while now. I think this is year 2 or maybe even 3. I don't know. But it's been a long time. So hop on over to our YouTube channel, and our handle is Team Evo AZ. And right there, you will be able to just scroll around on that homepage. You will see all of our shows. But right at the top, you will find this show, and this is our monthly market update. We are here every month with Ryan, guys, bringing you the real news, the real local news. So definitely like, subscribe, click the little bell so that you can get notifications. If you are more of that audio type, maybe you run a lot, bike a lot, drive a lot, whatever that case may be, hop on over to your favorite podcast platform, do a quick search for Arizona Real Estate Radio, and that is our podcast channel. We run it a little bit different than everybody else out there. It is our channel. So all of our shows are put through that. So you will be able to get a variety of information and quite a bit of education if you subscribe, like, follow, download, and all that jazz over there. All right, guys, until next time.
Bye.
Thanks, everyone. Bye.
Thanks.